Accounting and Auditing Organization for Islamic Financial Institutions (AAOIFI). The objectives of AAOIFI: first, to develop accounting and auditing thoughts relevant to Islamic financial institutions. Second, to disseminate accounting and auditing thoughts relevant to Islamic financial institutions and its applications. Third, to prepare, promulgate, and interpret accounting and auditing standards for Islamic financial institutions. And the last one, to review and amend accounting and auditing standards for Islamic financial institutions. AAOIFI also issues standards on auditing, governance, ethics, and Sharia. AAOIFI establishment, the existing international standards were inadequate to cater for the Islamic finance industry's needs. Research conducted in the early 1990s. Research conducted to determine the appropriate methods for preparing accounting standards for IFIs. AAOIFI also wanted to address the lack of standardization of Sharia accounting and auditing standards for IFIs in the GCC countries. AAOIFI standard adopted in Bahrain, Jordan, Lebanon, Qatar, Sudan, and Syria, while Indonesia and Pakistan issued their own Islamic accounting standards with requirements similar to AAOIFI.
IOFI standard that have been developed by IOFI. There is have 5 standard. Firstly is accounting standard, auditing standard, governance standard, ethics standard, and lastly is Sharia standard. Accounting standard. First is objective of financial accounting for Islamic bank and financial institution, IFIS. Second is concept of financial accounting for IFIS. Thirdly, general presentation and disclosure in the financial statement of IFIS. 4 is murabaha and murabaha to the purchase order. 5 is mudarobah financing. 6 is musyarakah financing. 7 is disclosure of base for profit allocation between owners, equity, and investment account holder. 8. Equity of investment account holder and their equivalents. 9 is salam and parallel salam. 10. Ijarah and ijarah muntahiyah bin tamlik. 11 is zakah. 12 istinab and a parallel istinab. 13 provision and reverse. 14 general presentation and disclosure in the financial statement of Islamic insurance companies. 15 disclosure of base of for determining and allocating surplus or deficit in Islamic insurance companies. 16. Investment funds. 17. Provide and reverse in the Islamic insurance companies. 18. Foreign currency transaction and foreign operation. 19 is investment. 20. Islamic financial service offered by conventional financial institution. 21. Contribute in Islamic insurance companies. 22. Deferral payment sale. 23. Disclosure on transfer of assets. 24. Segment reporting. 25. Consolidation. 26. The lastly is investment in associate.
AOFI financial statements number 1 have 5 elements. Set of financial statement consists: first, statement of financial position, which is balance sheet. Next, income statement and cash flow statement, statement of change in owner equity or statement of earning, retail earnings, and then notes to the financial statement. AOFI financial statement also have 3 additional asset statements. First, statements of change in restricted investment. Second, statement of sources and use of fund in the zakah and charity fund. And the last, statement of sources and use of funds in the court funds. There are several additional disclosures of our fee. First of all, overseeing the transaction and the scope of the advisor or board's jurisdiction in line with the bank's rules and in real practice, the bank's obligation to pay zakah, accounting procedure imposed by the Islamic bank's management that are incompatible with the nations of financial accounting for Islamic bank. Revaluations of asset, liability and restricted investment to cash equivalent value, disclosure of earnings or expenditure prohibited by the Sharia, disclosure related to unrestricted and restricted investment account, and disclosure on method used by the Islamic bank. Malaysian Accounting Standard Board (MASB) established under the Financial Reporting Act 1997 as an independent authority. The aims Malaysian Accounting Standard Board (MASB) to develop the issue accounting and financial reporting standard in Malaysia. At August 2008, MASB announced its coverage plan to fully adopt IFRS by January 2012. MASB ensures that applications of generally accepted accounting principles would not be in conflict with Sharia. And then it can conclude that its accounting standards would apply to Islamic financial transactions unless there is Sharia prohibitions.
MASB's conclusion was documented in its Statement of Principles, SOP I1 Financial Reporting from an Islamic Perspective, issued in September 2009. So, SOP I1 reviewed by the Sharia Advisory Council of BNM. Any additional guardian that may be needed would be issued by way of other pronouncement, such as technical release, which would supplement rather than override the standard. So the last slide, MASB standing commit on Islamic financial reporting that include representative regulators and standard setters, auditors, bankers, accountants, and the others. So MASB approved accounting standard applied to Islamic transaction undertaken by entities under the purview of the Financial Reporting Act of 1997. However, the International Financial Reporting Standard IFRS adopted as MASB approved accounting standard may not have a specifically considered Islamic financial transaction in arriving at its conclusion. That's all.